All right, passive income investors, we're going to start this video by sending a small prayer to all the negative Nancys that told us not to buy the dip. Sending this prayer out to you.
Peter Schiff says actually both parties will be the ones to blame when the recession he says we're about to see makes the financial crisis of 2008 look like the roaring 20s by comparison.
It should raise rates, but the market's going to collapse as a result. I mean, they just haven't figured this out yet. We have a gigantic bubble.
Welcome back, guys. I'm not actually smoking the cigar. This is actually just a gift. I'm using it as a prop. As many of you may know, I quit smoking. That's why I keep buying the tobacco stocks and things like that. I'm no longer a smoker, but these are incredibly good cigars, the Cuban cigars. Just a bit of a gift for somebody that helped me out not too long ago in the past, guys. But today I want to break down all of these earnings really quick, guys, because it's been super exciting. In my last video, I was talking about how I was using Facebook to cover some of my taxes, and I was down on the position, but now things are looking up. And I started this video as kind of a joke because for the longest time, guys, at the beginning of this year, I liquidated $15,000 that I bought a ton of stocks with, and I was getting a lot of flack from people. People I'd be talking to online, the constant bear market, negative Nancys out there, and I just didn't see that happening. And sure enough, I was right. They were wrong. Sooner or later, they will be right, but it's not today, luckily. And we're going to really quickly look at Facebook earnings, obviously, and Facebook killed it today, guys. Just killed the game. They had an earnings they had earnings of about $2.38 per share, and the expectation was 2.17 cents. They outdid the revenue, I think, by almost $500 million. The revenues were $16.91 billion, and the expected revenue was $16.39 billion. A huge difference in revenue, guys. But when we're talking about billions, I mean, what's $500 million, right? Well, it did Facebook good, and I'm feeling good. I think we're sitting around 169 with my average buy price of around $160. I don't have much else to say about it. I'm going to keep holding this position for the time being, and I'm going to probably hold it for the next 2 or 3 months until tax season for last year comes up, when I'm going to liquidate the entire position. A lot could happen between then and now, but I have good faith that I got in at a really healthy price, and we'll see what the future brings, which leads us on to Tesla. I only own a very small percentage of this, and they really missed earnings, but for quite a few reasons, and I see why they were firing off a lot of their staff, trying to keep up and get these revenues up, guys. But we're looking at an earnings of 1.93 per share. Again, for them, not terrible for a company that is expanding the way they are, with an expected ER of 2.2. So they really missed by quite a little bit there. They had revenues of 2.3 billion with an expectation of 2.08. So they actually hit revenues more than the expectation was. Just the earnings were down a little bit. I haven't done too much research on this yet. The stock's been holding relatively flat in this horrible time, guys, but they're doing pretty good. I'm surprised, so I got to look a little more into this. I don't want to say anything in case I misstep on something, because I've been too busy running around looking at kind of Microsoft and Facebook, but still holding my small position in Tesla. It's going to be a long-term decade position. They have a lot going on. I'll probably do a video on them separately at some point. Microsoft actually missed on some things here. We had an earnings beat of 1.10 per share with an expectation of 1.09, so pretty much by like a cent per share. Again, it adds up when you're a multi-billion largest company in the world. That 1 cent makes a big difference, obviously, if you were to times that out by each share. But we're looking at a revenue of 32.47 with an expectation of 32.51. So they missed expectations on revenue just slightly. This company is such a conglomerate. Their growth pace is obviously going to be a lot slower, which is what makes Facebook so impressive, because the scale of this company to have the kind of growth that it has is absolutely absurd, which makes me think that this could be one of the largest companies, if not the largest company in the world, if they can keep this growth rate going, guys. There's a few other ones I haven't talked about on here. I don't know why I picked these three specifically. I haven't talked about Apple at all. Apple being one of my biggest holdings, they did great on revenues. Things were pretty good for them all in all. They've been doing okay. And actually the whole market in general right now has been rallying. If you were buying the dip and you sold out, man, I feel bad for you, because I am a long-term player in this game. If there's one thing the market has done 100% of the time, that is go up. I don't care what any bear market negative Nancy tells you guys. Since the inception of the S&P 500, all these ETFs, the market has always, over the long term, gone up unless you picked really bad decisions or under diversified yourself. You probably didn't do too good. Obviously, there's a bit of management involved over time, but at the same time, I just feel like this is such an easy way to make money, especially when there's a lot of negativity in the markets, guys. It's that psychological factor. The only way to make money in the markets is simply by buying when the consensus is against you, guys. It's the only way you'll make money. If the consensus is against something and you're for it, and you're right and they're wrong, again, it sounds like a complicated thing to do, but really it's not. It's easier than you would think, because a lot of people play what is called technicals, guys. And when the markets were coming down, the technicals in the short term really made us look like we were heading into a crash. But I looked at the revenues. You're looking at these companies and what they've done over the year for the first 3 quarters, and there is no real sign that we should be heading into any kind of a real recession. Things are okay right now, guys. Jobs are good. There's none of the real big tell signs that the economy is going to be slowing down. So I just didn't see that, and to sell out of any position based on that would have been absurd. And actually, I took the initiative to sell off a huge chunk of my gold position. Again, first video on this entire channel, and I used it to buy $15,000 worth of stocks, which right now is looking pretty healthy in my overall portfolio, guys. So I hope you enjoyed today's quick video, just kind of, you know, celebrating this incredible earnings seasons that literally would have dictated whether we were going to head into a bear market crash or a return to hopefully what is going to be new highs over the next few months until next earnings. But stay cool, stay awesome, guys. Look forward to seeing you tomorrow.